Hello everyone, welcome to Just Invest Today, and today is a very good video, man. Today we're talking about Stamps.com new deal, guys. Thoma Bravo buys out Stamps.com for $6.6 billion. And guys, look what I did in my last video. I did a video about Stamps.com 2 months ago, saying how this company is a very undervalued gold stock. And it's just good to know the research you did, what you saw in the market, and what the market was pricing the business at. It feels good knowing that when you do research, you get the good result. It might not happen all the time, but still, at least you're on the right direction, on the right course. And that's what we want when we're investing. So I had a 70-80% gain just in 2 months, which is amazing, man. Like this was what I was looking for. Like I woke up in the morning, I'm just like, whoa, 70% up on this new private deal. So Stamps.com, the online postage company, agreed to be acquired for $6.6 billion in cash. And this is the good thing, guys. This might not even be over. Stamps.com is looking actually to shop to see for a 40-day shopping period to see if they can actually go out and get a higher price for the company above the 67 premium that Thoma Bravo paid already. So, and I have a 40-day agreement. And you guys, you gotta remember, before this was like 2 years ago or something, or last year, or around that time. There is not Spotify, Shopify wanted to buy, or were planning to buy Stamps.com. So there was always that buyout potential happening around there. But when you looked at the company was growing around like 25% a year. It had high return on equity, high return on invested capital. It was growing, like the revenue was growing like 20% a year. Like, we know the huge tailwinds for e-commerce right now. Like the tailwinds for, like, this, how is this business gonna fail now? The e-commerce tailwinds are just crazy. Like, they're guaranteed to at least grow 10% a year just from e-commerce tailwinds. Plus, they had like 15% of all the package traveling in and out of the US. They had like a 50%. They had a new Euro business, MetaPacks, that was growing around like 100% a year. Like, there's so much good things going for it. But the reason why the price was so down was this company never gave guidance. And this is what I'm talking about. When the company doesn't give guidance, people have the Wall Street analysts and everyone don't have faith in the company. They kept delaying guidance. So every time it wouldn't give guidance, the stock would drop like 20%. And I would just get the shares. I'm just like, why is this dropping 20%? Just because no guidance, even though it's growing at like 20% a year, it never made sense to me. So I'm just like, every time it dropped, like 180, I was buying shares. 190, I started buying shares. At 200, I started buying shares too. And I always thought this company was going to be selling at 330, 320, around that mark, because it was just growing way too fast. The e-commerce tailwinds are just too good. The only downside, the two major downsides I had about this company was that it was issuing shares. It was issuing a lot of shares, but I didn't really like that. But the thing about the management was buying back a lot of shares, and it even increases buyback because of how much money they were making. So that kind of counteracted. So the risk was kind of negated by those two factors. And then the next risk I always thought in my head was just that this company, like, it's so easy to make these online postage kind of stamp companies. Like, it's so easy to make it. Like, there was like Shitbob, there was like Pity Browse, there was just a lot of companies like just making these type of companies. It's so easy because there's no cash up front for these companies, so it's just easy to kind of, not easy to like make, but like there's gonna be a lot of competition in this area. So that's what I was seeing. So just look at this pop. It was around 197, 198, 198, boom, 323, and that's not even what they're buying it at. They're buying it at 330. So there's still like room to grow. And maybe, guys, maybe we can even see a bigger buyout. Maybe they'll get to 400. Who knows? There's companies wanting to buy Stamps.com from a long time ago. So We already see this as $6 billion market cap. So, man, this is pretty crazy. This is my first time actually being able to actually see when you have a stock and the stock is going to go private and you can't own it anymore because they're buying it out pretty much. So, man, this is really good news. It feels good knowing that I purchased this company. You can even go to my other video 2 months ago and see how I was feeling about stamps.com back then, and you can see how, like, what transpired and what I was thinking back then and why I thought this company was a really strong buy. So yeah, so guys, tell me what you think about this. This is great news. Stamps.com, huge increase, 58%, and I think it might even go more in the future. Who knows? Maybe they find another buyout company. Maybe it goes to 400 easily. So tell me what you think about this video, guys. Thank you. Like it, subscribe to my channel. I'm always going to be providing more content. Thank you. Peace.